All right, welcome back. We're going to now apply relevant decision making to a make or buy analysis. So a make or buy decision is something that managers face. And basically, the question is whether we make a product we need, a raw material that we need to go into our final product ourselves, or whether we buy it from a third party. This whole concept is called vertical integration. When we make the supplies that go into our final product, we're becoming more vertically integrated. A decision to carry out one of those activities in the value chain internally rather than externally means that we're going to have a make or buy decision. Now, why would a company ever decide to do this? Well, it could relate to what we're going to focus on, which is cost. So it's sometimes cheaper to make a product internally than it would be to buy it from a third party. But in some cases, it's not just the cost, it's qualitative factors like safety. So I had a client that made firefighter suits, and they made a lot of their raw materials internally because they wanted to control the quality. If you think about what firefighter suits are used for, if the quality is flawed, somebody could die. So they wanted to control quality. Even though it cost them more money to do so in some cases, it was worth it because their final product was one where quality was extremely important, because it's the difference between saving a life or not. So vertical integration does have some advantages. It has a smoother flow of parts and materials because you control it all. You're not reliant on a supplier. You have better quality control, as I already mentioned with my firefighter suit example. And then you can realize any profits, because obviously if a third party is making something for you, it costs them less to make it than they're going to charge you, because they need to be in business and make profit. So if you make it yourself, you can potentially realize those profits. However, there's this concept of economies of scale. So vertical integration isn't always the right solution, because if I only need a certain amount of some input, I can make it, sure, but it doesn't mean that I'm going to be able to make it for the same cost that a supplier could that's making millions upon millions of it. The more we make of a single product, the lower the cost per unit generally goes, because remember, we're able to spread our fixed cost over more and more units. That is going to lower the overall cost per unit. So that whole concept is really economies of scale, meaning that by pooling the demand of numerous different companies, we can have a large scale production of a product. And generally, when we have a large scale production, we're able to make each unit for a cheaper amount. That economies of scale factor can be appealing, but a company has to be careful to retain control over activities that are essential to maintaining its competitive position. So if you think back to my firefighter suit example, it would have been nice to get some of their supplies cheaper because the suppliers had economies of scale, but they chose not to because maintaining quality was essential to maintaining their competitive position in the marketplace. So let's look at an example for Essex Company. Essex Company manufactures Part 4A that's used in one of its products. The unit product cost for the part is given here: direct materials, direct labor, variable overhead, depreciation of special equipment, supervisor salary, and general factory overhead of totaling to 30. The special equipment used to manufacture 4A has no resale value. The total amount of general factory overhead would be allocated on the basis of direct labor hours and would be unaffected by the decision. The $30 unit product cost is based on 20,000 parts produced each year. An outside supplier is offered to provide the 20,000 parts at $25 a part. Should we accept it? Well, on its face, it seems like the answer is yeah. You should. It's $25 is cheaper than 30. But remember, the only things that matter are things that are different between alternatives. And we're not going to be able to eliminate the entire $30 per unit cost if we go ahead and buy from a third party. So the first step is to figure out what is the differential cost of making this product. So we know the differential cost of buying is $25 times the 20,000 units, which is where we arrive at this 500 grand. So that's certainly the differential cost to buy. Because if we don't buy, it costs us $0. And if we buy, it costs us that $500,000. For figuring out the cost to make, the direct materials would be relevant, because if we don't make it, it's 0. If we do make it internally, it's 9 times the 20,000, which is where the 180 comes from. For direct labor, same thing. We don't make any, it's 0. Otherwise, it's 5 times 20,000 or 100,000. Variable overhead, again, variable means it's going to change based on units. So if we make 0 units, it would be 0. Otherwise, it's 1 times 20,000 or 20,000. The depreciation of the equipment, though, is irrelevant because it's a sunk cost. It won't change, so that would not be included. The supervisor's salary would be relevant because you'd fire his ass if you're going to start buying it externally. So 2 times 20,000 gives us the 40,000. Allocated general factory overhead is irrelevant because it said in the problem that it would not change based on buying it externally versus making it internally. So we don't include that. Which means that the true differential cost to make it is $340, which is cheaper than $500. So it's actually going to cost the company an additional $160,000. If I did my math right, I just did that in my head, so that's always scary. But it's going to cost an additional $160,000 if we buy the product as opposed to make it internally. Even though on its face it seemed like it would be cheaper to buy it because 25 is cheaper than 30. Another approach to this would be to look at just the per unit amounts that are relevant, which would be the 9, the 5, the 1, and the 2. If we add that up, 9 plus 5 plus 1 plus 2, we get $17. So the sum of our circles is 17. Well, what's the difference between 17 and 25? That would be 8. And 8 times the 20,000 units gives us that same $160,000 difference. So that would personally be the way I would have done this problem because it's less math, and I suck at math despite the fact that I'm an accountant, and I arrive at the same conclusion. So the true differential cost per unit to make it is 17. That's cheaper than 25, so that supports continuing to make it. And the difference between the differential cost to make and buy is $8 per unit. So times the 20,000 units gives me that overall effect of 160. So if I continue to make it, my income is going to be 160,000 higher than if I buy it. Or if I decide to buy it, my income would be 160,000 lower than if I continued to make it. So one of the things you want to pay attention to on problems, especially multiple choice problems, is reading the question carefully. Because the answer that's going to be there is income is going to be higher or lower by 160 and then some other distractors. But how do I know if it's a higher or lower? Well, it depends how the question is phrased. If it says, what happens to income if we buy it? Well, because buying it's more expensive, income would be lower. If it says, what happens to income if we continue to make it? Because making it's cheaper, income would be higher. So read the questions carefully. So to kind of reiterate, the cost to buy the equipment is a sunk cost. So depreciation just spreads that sunk cost over its useful life. So as I already mentioned, depreciation is always irrelevant because it's sunk. And then because the allocated general factory overhead won't change, it's irrelevant to this decision. Now don't memorize that, oh, all general factory overhead is always irrelevant. It depends on the problem. If the problem said we could avoid some of that by eliminating making this product, then that part we could eliminate would be relevant. So you have to read the question. Every question is going to be different. So again, as I already calculated, the financial advantage of making the part is $160,000. So we should continue to make the part. You also should consider opportunity costs. We mentioned those before. Opportunity costs are not actual cash outlays, but it's the benefit that's foregone. So as an example, if the space to make Part 4A had an alternative use, the opportunity cost would have been equal to the segment margin that we could have delivered from the best alternative use of the space. So in other words, if we said, well, if we stop making this part, we could make another product, and that product could give us a segment margin of 100,000. Well, the cost of buying the product versus making was 160 in the negative. If we could use that space to earn 100,000 in segment margin, now the net difference is only 60, but it's still negative, so we shouldn't do it. If instead that additional segment margin we could get from the new product using that space was 200, then that flips things. Because now, even though we lose 160 by buying it, if we get an extra 200,000 by utilizing that space to make a different product, we're now ahead of the game by a positive 40,000. So we always should be considering opportunity costs. That could be, like in this example, the segment margin that we get from making another product in that space, or it could simply be like rent. If we don't use the space, maybe we could rent it out to somebody else, and that would be an additional amount that we would have to factor in to our decision making. So even though opportunity costs are not like cash outflows, they still need to be considered in our analysis because they'll differ between alternatives. If we use the space to make product 4A, we can't use it to make another product. But if we don't use it, then we can. So the segment margin is going to differ between alternatives. If we use the space, we can't get any extra segment margin. If we don't use the space, we can. Likewise, if it were rent, if we use the space, we can't rent it. If we don't use the space, we can. So it differs between alternatives, and that's why it matters. If it's different, it matters. If it changes, it matters. If it don't change, it don't matter.